Friends, welcome to yet another video in our series Finance and Investing Tidbits. In this video, which is going to be very brief, we are going to talk about the concept of market capitalization. You may have heard about this term, but let's just derive some clarity on this. Market capitalization indicates the collective price of all the equity shares issued by the firm. So when we say all, it includes the shares issued to the promoters as well as to the other investors. Now, of course, when you see the exchange website like the Bombay Stock Exchange, you will find two market capitalization numbers being quoted there. And I'll talk about that briefly towards the end of this video. It can therefore be simply derived as the number of equity shares multiplied by the prevailing price. Remember, market capitalization is a dynamic number and can change from second to second considering that the prices themselves fluctuate. So unlike what appears on the financial statements, which are stable numbers and historical numbers, market capitalization is an absolutely current dynamic number which is continuously changing and evolving. So size of the market capitalization indicates the overall market value of the firm has created for its equity owners. So here the specific focus is on equity source of financing, not debt as a part of this. There is another concept called as enterprise value, which takes into account this market capitalization plus the market value of debt. But we will talk about that in a separate video. Here it's completely focused on the collective price of equity as a source of financing. More the market capitalization, the better it is. It is the market capitalization which is used for defining categories such as large caps, mid caps, small caps, micro caps, and so on. Let's take a quick example. So let us say the price of a share is 100 rupees and the number of shares which have been issued are 10 crore. Then 10 crore multiplied by 100 rupees, 1000 crore becomes the market capitalization. Now let us say out of this, 60% shares are owned by the promoters. The balance 40% have been issued to other investors. Then we can say that the market capitalization collectively is 1000 crores. But how much is the floating stock which is available, which actually gets traded in the market, because 60% of that which is held by the promoters is not going to be regularly available for buying and selling. So if you want to really measure liquidity of a company's share, it is the floating stock of those shares and their collective price is what matters. And if you see the BSE website, it reports both these numbers. It would report 1000 crores. It would also report 400 crores. 400 crores is the collective price of the shares which are held by all the non-promoter entities. And therefore, the day-to-day buying and selling which is happening is typically out of these 400 crores worth of shares. So I hope the concept of market capitalization is clearer having watched this video. If you like this video, do share it with others. Thank you so much.